Hello and welcome to the Ledger Lounge, an accounting and business advisory podcast brought to you by James Scott from Oldham, Greater Manchester. My name's Matthew Taylor.
I'm Katie Allan.
And I'm Lauren Thompson.
Welcome to the Ledger Lounge.
Coming up on the Ledger Lounge this week, we discuss setting up a small business and the challenges that you can face.
Hello and welcome to episode 4 of the Ledger Lounge. We're here with Lauren.
Hello, I'm back.
And Matt.
Hi. I'm the producer, but I'm also a client of James Scott and now a guest.
Wow.
Yeah.
So 3 things in one.
Yeah. Today's episode is going to be about more of like when people start up businesses, what the do's and the don'ts or the rights and the wrongs.
I can say a lot of wrongs.
Bit of information of deadlines and the best way to do things.
Because I think setting up businesses is people are all right doing it, but they tend to forget about the background of running your business and having a software, and they tend to wait until 12 months has gone down the line and they get a letter from HMRC and they think, oh yeah, I've not done anything about that.
Usually when someone sets up a business, they're an entrepreneur, aren't they? So they're really creative. They've come up with the idea and they've got all of the plans for that idea, but then forget about all of the deadlines, all of the best tax ways and things like that. They don't really give that.
I don't think you know. I think we don't really know, do you? Yeah, I think that's the thing. Like this is, I think a lot of people who set up businesses have a litany of failed businesses behind them or failed ideas behind them, and that's my background. Do you know what I mean? I've tried to sell vintage furniture and stuff like that, which I never really took off, but I learned a lot about making a website, doing product photography, loads of things like that. Office supplies, I was just telling you about before we started. I was self-employed under a franchise, which was terrible. It was a terrible experience, but it was also really, I learned loads from that. Yeah. So now I've started this business, the podcast studio, the podcast production company. I've learned a lot through what I didn't know previously and it's starting to come together a lot more easily because I've got that previous experience. And one of the things I knew as soon as I went as a limited company that I needed to do ASAP was get an accountant. Yeah. Get an accountant that I would have a good relationship with. I didn't necessarily envisage we would be working on a podcast together, but I knew that relationship was vitally important, and mainly because of my understanding, like you were saying before, what I'm good at. I know what I'm good at, but I'm also very aware of what I'm not good at and where I need support. So I'm doing much better in this business because I'm much more well armed, but I can prepared of like where I need help and where I don't need help. But for people that are doing it for the first time, and especially if they are very creative, very focused on the vision, very focused on the output,
it's not important.
It's all the admin and all the background stuff, and it's not just accounts. There are other things, but the amount of different roles that you have to fulfill as somebody who's self-employed and starting off on their own, it's ridiculous the amount of things that you have to know and you have to learn, because there's no IT person when your IT goes wrong. There's no it's just an infinite thing. You've no marketing department, you've got nothing, so it's vast. But the one thing that stressed me out more than anything in the past is money. It's the one thing. So that's why, for me, although I do have you now as my accountants, it's great to do this podcast and be involved in producing it, because I'm going to learn a lot. And I hope that people that are listening to it are going to learn a lot as well. Like you said last week, you were saying about becoming friendly with your accountant, so they're not dreading that phone call.
Absolutely,
and they're prepared for things in advance. Because I've had all those bad experiences in the past.
I think that's why it works for us at James Scott, because we're doing things timely, monthly, weekly, quarterly for some clients. You're never really that far behind, so you can see if we see a dip in I don't know, the cash flow or whatever, we can contact you within that year
at the time that it's happening.
Rather than doing your accounts 9 months after your year end and saying, oh, what happened?
Yeah.
And you can't go back in time and fix it. It's already been and gone.
Yeah. And you've missed opportunities, haven't you?
And I think, like you said, you're covering many different people's roles as a business owner. Sometimes you kind of go off down this little road of, oh, well, I'll think about that tomorrow. I'll do it. I'll have to do that next week. I'll have to do it, like you said, money.
You're covering all these different roles, but you're not covering them all fully because you can't possibly. You have to divide yourself up and say, right, I'm an accountant, I'm marketing, I'm operations, I'm, whatever, sales. All these different things is what you've got to do, and you've got to try and divide your time up in the best way possible. But it's very easy to just get invoiced. Even you forget to invoice people. You forget to get paid. That's a big thing, and not getting paid and not keeping a track on who's paid you, who hasn't paid you, and all that kind of stuff. And it can become really overwhelming and really, really stressful.
I think as well, the longer an invoice remains unpaid, there's almost a bit of leeway then for your customers to not pay you. They've
not
not
done it for the last 30 days. So.
Yeah.
What's another 15?
And then next time you're invoicing again, you're setting a bad precedent, aren't you? You need to.
And then you're spending
people
more and more time chasing the customers for something that, if you get it right in the beginning, these are my payment terms. Obviously, if they don't pay, you're on the back. You're sending them a statement. You're asking them. You're then training your customer to pay you timely, and then eventually over time you've not got to chase them because they just do it naturally.
And conversly, you want to be making sure you're paying the invoices that you owe as quickly as possible as well, and you're not dreading a phone call from the accounts department at one of your suppliers or whatever it is.
You're on stop.
Exactly, all that kind of stuff, and it's. I think once you get to, like, when I was creating this studio, that was the fun bit. So I was like, making it and doing things on my own time, and wanting to get things done, and I've got bits of money coming in from here and there, and I'm paying to do this, and it's kind of easy because the money coming in is all getting spent on the studio, and but then as soon as you get to the crux of it, and you open and you've got clients and you've got customers, then it becomes real. You've got customers, you've got money coming in and out, and you've got to worry about cash flow. Like I've been working with Eddie, who's the videographer, like, and couldn't pay him for a while. Now Eddie needs to be paid, and it's the realities of running a business, and you've got to get money in off your clients, and you've got to pay your bills and all that kind of stuff. And it's not what you set up a business to do. You set up a business to.
But if you have a proactive accountant that's doing your records and your stuff sort of every week or every month rather than once a year, they're going to alert you to that.
And they become part of your team. Yeah. And when you're working on your own,
they become part of your support system.
Yeah, exactly.
I think.
Yeah, 100%.
Because if we do the bookkeeping for each of our clients and we notice that somebody's not paid you, we'll phone them up, won't we? And we'll say,
we'll ask
do you know this person's not paid you?
Yeah. Yeah.
Sorry, not the I mean, we'll phone the client and say, do you know why this person's not paid you?
Yeah.
And then we can even step in, can't we, if they want us to sort of say,
and I think that's the good thing about having Xero as well, because you can set up payment reminders. So for anyone that's not paid,
after a certain amount of days, it'll just
get
send
an email,
an automatic reminder, which I think is quite good.
Yeah, and I suppose some people probably still ignore that anyway, but at least you've got a record of, no, I have chased that payment.
Yeah.
After the 15 days, if they've still not paid, you'll ring them, or, a phone call is always best sometimes anyway, isn't it, than an email?
So,
yeah. Well, emails can get ignored.
Yeah.
But sometimes if somebody receives a phone call from your accountant and they're asking why this invoice or bill's not been paid, then that can sometimes, shift them on in the right direction to think, right, well, I better get that paid.
Yeah. And that's
now
the thing,
somebody else is involved.
It's hard when you're like, especially if you're dealing with other small businesses where people and you're you're the sales, you're doing the sales with them and the customer relation stuff, but then you've got to chase them for money, and it's kind of like it's a different person, it's a different persona then that you've got to have, because you've got to be like no nonsense and like, look,
but you don't want to ruin that relationship at the same time.
Yeah, exactly. So it's a fine balance there between that. So like if you do have somebody that can chase things up for you in that respect, then, which ultimately you want to have either an accounts department or a company that looks after those kind of things for you. But you can only learn in business by doing. can't you? It's the only way you just have to throw yourself in at the deep end, and then you just have to learn. But the more support people you've got around you, the better.
Yeah. So how did you set up at the start of this in terms of your softwares? Did you come straight to it? Because obviously Kate is your client manager, I'm not, but did you come straight to us and then go straight into Xero and use it that way?
It's still quite new, isn't it, in terms of what we've actually done?
We're nearly there with it all as well, aren't we now? We had, 6 months to bring up to date.
Yeah, so I just kind of so I've been keeping my invoice, copies of everything on I'd like to say a monthly basis, but not necessarily always monthly basis, but, keeping a track of everything. So then it was a case of putting all the invoices into Dext and then into Xero. And then you just kind of got to spend a bit of time familiarising yourself. I mean, you came in, Katie, didn't you, to help me sit down and go through it. Unfortunately, you had to leave because you had a personal emergency to deal with. But, but that's the thing. That's what you need. You need someone to sit down with and go through it. And then we spent an hour and a half on Zoom call, didn't we?
And I think that's a good thing about the softwares that we use as well, because I can see what you're looking at.
Yeah.
We don't have to always be sat next to each other, whereas years ago you used to have to wait for your accountant to come to see you.
Yeah.
You'd probably have a piece of paper with scribbles of all these notes on it of what you've found or what's an issue.
Yeah.
Whereas now you can just ring me up and say, this has just come out of the bank, or I can't find this invoice, or...
Yeah.
And we can see it at exactly the same time that you
Not
can.
that we're spying on you.
No, listen, the thing is, from my own previous experience and knowing where I've let myself down in the past and let other people down as well, and doing things wrong, and it's what you need, and it's why most businesses, for obvious reasons, are made up of a team of people.
Yeah.
Because you need to have people that are going to spy on you, that are going to nudge you, that are going to put pressure on you to do things, and because it's your responsibility. If you're the company accountant or whatever, it's your responsibility to get the information off people. So you have to push them, and you have to do that. And if you don't have somebody doing it, it's very easy to just let it slide.
Yeah.
And then the more you let it slide, it's just a nightmare, isn't it? It's just like you were saying that last week about the 4 years of
for
the
Amazon stuff. It's just
we had a client that had buried his head in the sand pretty much, and it just came the time where we had to pull it out of the sand and say,
deal with it.
It's happening now. This is real life, and it's fine. We'll deal with it.
Yeah.
And I mean, 4 years is a long time, but now it's sorted and we're on the straight and narrow again.
But I can, going into all my failings and everything else over life, but I've had moments where I've put my head in the sand over things like that in the past.
Yeah.
And other people have had to help bail me out.
You take something from those failures though, don't you?
You do, but the feeling that the weight that you carry when you're doing that, even if you know what I mean, subconsciously you feel it, you hold on to it, it's in your body, it's just hard. And then as soon as you help that person get over that the weight, the burden, because you're carrying it as a burden the whole time, and it just gets worse and worse and worse. So you can't underestimate how important it is to just be, like you were saying, Katie, instead of looking back and saying, well, this was 9 months ago, we've done it. Yeah. Being up to speed in real time with where you're at financially as a small
eventually
business.
It makes everything a bit more of a breeze, that you've only got a week's worth of transactions to look at, and it's still fresh in your mind if I ring you and say, what was this for? And you're, actually, I remember now, it was only yesterday, or, I've
got this thing 3 years ago, do you remember? No, obviously
you're probably
not.
Thinking, if an accountant asks somebody what happened 2 years ago, the chances are they don't know.
No.
Yeah.
Or they couldn't tell you.
Exactly.
And if you wait until that last minute of the deadline, so if you're a limited company, you've got 9 months after your financial year end to submit your tax return.
Mm-hmm.
If you do that on the 9th month, you're looking back
more than
18 months ago. That, I mean, if you're not seeing figures until that deadline, it's almost useless because it's 18
You're
months.
only then reporting just for HMRC, for the benefit of submitting your accounts and not for yourself.
And you can't actually look at those figures and make changes based on them because too much time's passed.
And depending on what you're doing, what your business is like, you're looking into the past, aren't you? You're not dealing with, you're not aware of what modern trends are and how things might have changed in your business and things like that. So it's like the key indicator of how you're doing is how you're doing financially.
Yeah. And if you can phone Katie up at any point, because we do the bookkeeping weekly or monthly, you can sort of say, how am I looking for the last 3 months? And once you get more time under your belt, you can go, how am I looking at the last 3 months compared to those same 3 months the year before?
Yeah.
And it's, you know, it's 1 minute of a job, isn't it, to pull that information out?
Yeah, as long as all your data's in and everything's reconciled, it's pretty much the click of a button to run a report. And,
Whereas
and you might see something that stands out on that, let's say we run a profit and loss, and go, there's no way that I've spent all that money on computer equipment this year. And then we might dig into it and find that actually it wasn't computer equipment that's gone there, it's something else.
But having that conversation with your accountant is really important, I think, even to just, because you should be able to phone your accountant up and say, how am I doing this? You know, does it look good?
What can I do? What can I be doing better? Or
is there a big spend? You know, do we need to cut costs?
Well, this is the thing that I'm going into now in this business that I didn't in the past. I was just kind of doing it because I didn't want to work for anybody else, and I didn't really know what I wanted to do and what I was good at. As I suppose I made a decision to stop doing things that I didn't want to do in life in general. At one point, it's all right. Well, if I don't want to do it, and I'm not interested in it, I'm not going to do it. So whatever I'm focused my energies into, it's going to be things that I'm interested in and passionate about. And it's a great way because it's working. But the thing is now, the difference is, I want to grow this business. I want to grow it. I don't just want to make it sustain me as a job. Yeah. I want to grow it. I want to get people involved. I want to buy premises. I've got a plan. I've got a vision for what I want. And I know the only way of doing that is being on top of the finances, being able to go out and tell people how the business is growing, understanding how much profit I'm making, what my costs are. And then I can, start, applying for mortgages and loans and things like that for business premises and all that kind of stuff. And so I understand now that how important it is if I want to do those things.
And if you've got a good accountant and the flow of information is sort of just going through between you and Katie, then you've got time to go out and do that and go and meet other people and explore other opportunities.
There'll be no waiting around, like you said, then if you need a mortgage or usually, well, in the past, we've had clients who'll book an appointment with the mortgage advisor first. They forget about us, and then they finish that meeting. The mortgage advisor will say, well, we need 3 years worth of accounts or tax returns. Yep, I'll do that, I'll get that. And then they'll contact us the day before they need to send that information. Oh, I need 3 years worth of, we've probably certainly got 2, but we might not have your 3rd year because we weren't aware. So we have actually spoke about that at work, and we could do with knowing when people's mortgages are coming due for renewal so we can push those tax returns up to the top of our list.
Because 9 times out of 10, they're going to need something from us to do those renewals or applications.
We spoke about it before. It's about like understanding how to make money work for you. And I think that's one of the primary, it's such a ridiculous situation that we are born into a system which is purely about finance, economics, capitalist society that we're born into. There's no 2 ways about that. And yet the one thing that we're not primed to know and understand from a young age is how it works. We don't understand how it works. Like
it's not taught in schools,
it's not taught in schools.
But it wasn't when I was there.
No.
Unless you go into business or you go and study something specific, you don't understand. You only understand and pick it up as you go through it. Either by doing it wrong or not. And it's a minefield as a result. And it's crazy that we live in this system. And we're all, not all of us, but the majority of us are oblivious to how it all works.
That's true, actually, and it's quite interesting. I think that you're 100% right, and people, they just don't have a clue, and I think that's why it becomes unimportant, and they just think, oh, whatever.
I'll worry about that another time. Or someone else will sort that for me eventually.
But how many businesses must fail, and people's projects and dreams and stuff have failed because they didn't know what they were doing on that side, and they didn't have the support and the understanding. And if they'd only have got into good habits right from the beginning and had that support and realised that an investment in an accountant that's going to be that's going to help you from day one, that was a good investment from the start, that they might have gone on and been really successful.
Ultimately, anybody sets up a business to make money, don't they? to generate their own money, to be their own boss. But I think people don't want to pay out at the start for an accountant because they think, well, I can do it myself, or my auntie's brother's cousin can do it.
Yeah.
You know, he worked next door to an accountant, so he can do it.
Yeah.
But actually having that team behind you and that firm that has really valuable experience and knowledge can be the difference between failure and success.
Business owners will think, well, I can't make any money out of paying an accountant. You know, they'd rather buy something that they can sell, or you know, especially in the beginning.
Yeah,
but I agree.
It can be.
It's useful. It's a useful.
Well, the most important resource you've got is time.
Yeah,
money and time are the two things, that, and especially the hardest thing to manage and come by when you're working for yourself.
Yeah.
So by paying whatever you pay a month to an accountant, if you don't, you'll end up paying for it in time.
Yeah.
Which is
if you're
more costly than what you actually, So it's well worth getting into the habit and seeing it as an essential outgoing early on.
And it's like you said before, some businesses get bigger and they have their own accounts team, they have their own sales team or whatever teams they've got. But if you've got an accountant on board that's external from the beginning, you'll never need an accounts team really because it'll still just flow. Yeah. Transactions might get more, they might increase, but everything's working and being done weekly anyway.
Yeah, you might just need somebody to input all that, and sort of do your bookkeeping in your office and stuff. And like, because we've been working with a VA, a virtual assistant, not to do anything for us yet, but she's come in and she's done some reels, and we're working. We have some ideas. We're working together on projects and stuff. But that's the kind of the next part of the team really, because she was coming in and say what she does for businesses, and it's so important that you can't necessarily so it's like, how do you grow your business? And like Eddie, who's operating the cameras and stuff now, like he's not an employee of KUPOD at the minute, but because he's freelance. But I need his skills, and I need him, and I'm really pleased that I found somebody that I can trust, and that he's on the same page as me. And then I've got the accountants, these you guys, which is obviously we've got a good relationship, we've got a working relationship in more than just the accounts who do this as well. But then it's things like that VA, like Laura, and I'll give her a shout out, it's called Pineapple VA. They can then take on and do some of the other stuff. Yeah. So you need to have those branches of people that support you, even if it's not people that you employ, other businesses that support your business. Trust
as well.
Yeah.
From a small business, you've got to trust them.
That's the biggest thing, 100% the biggest thing.
Yeah,
definitely.
You've got to give people your information. You've got to, and it's in their best interest then, because you're a business. It's in your best interest to look after your client, and like if it's Laura, she's got to look after you as a client, and then you build up that trust. And maybe one day you'll have your own little studio with reception desk and this, that, and the other, and assistants. And I'd love a PA. I love someone, 100%, like a proper one, someone who just like follows me around and like does stuff for me. That'd be amazing. I'd love that.
Makes you beef paste sandwiches.
Sings the beef paste song with me, which maybe I'll record that later and put it on as an outro. But this is the thing. Like, I genuinely love the opportunity to be able to mess about and make it part of work. And that's why I love doing this kind of stuff, like music and jingles and things for podcasts and just messing about, like the football one that I do, because it's just football. We have a bit of a laugh with it. We come up with daft songs, and we have little stupid things, and it's good fun. And you need to be able to like have the space and the time and the mindset to be able to do that kind of stuff. It seems like you guys have got quite a good team, and you all seem to talk quite fondly of each other and stuff like that. But you need space within a business for that, because if you're all stressed out to the max and you're all overloaded and your systems and things don't run properly, you can't do the fun stuff. And so if you neglect accounts or whatever it is, other stuff, that's when you don't have time, and you're just like fighting fires. You don't ever
find the time, because you think, there's too much to actually go through now, that I'll just keep forgetting about it, and hopefully it'll disappear.
I think we don't get stressed because of the way that we work.
Yeah, I think a couple of years, well, more than a couple of years ago now, we didn't work as well as what we do now in terms of doing things monthly. And we did have certain clients whose software came to us after the year end, a backup, and we'd have to sift through. But we was literally just trying to get the job done. We wasn't actually looking at the figures to figure out what had gone on that year or what's changed from the previous year. It was just a case of, these accounts are due.
Yeah.
Here's the backup. How soon can you get the job done? Get the client to sign it and send it to them. And you didn't really discuss the figures, did we?
I've done this job for like 10 years now and worked at a couple of different firms. And some firms do run to that.
They run to deadlines.
They run to the deadline.
Yeah.
So, we're completing people's accounts on the corporation tax deadline.
Yeah.
And it's not, you are stressed. It's not fun.
Yeah.
It's not good for cash flow either, is it? Finding out your tax liability on the deadline.
On the deadline. That
due the day after.
Yeah, that's what I mean on the last episode when I said I'd have to ring people up and say, hiya, you've got, 18 grand to pay. When? Today. Like, oh.
Yeah.
So that is, I mean,
and
not
that could
good.
be after might have had a really good year. And you're telling them 9 months after when they're in a really bad year.
Yeah. And they've not got that money saved.
And they've not got the money. Because whereas we're doing it monthly, we can put provision in place and say, well, actually, currently, it's estimated to be X, Y, and Z.
Yeah.
So we know what your profits are at the year end, so we can say, by the way, I think you should put 15 grand in a saver that's going to be due in 8 months' time.
Yeah. Because it's all about it's all about managing things in it properly and understanding that just because you have a good year and you might be the first time in however long that you've got generated loads of money and you've been working really hard to grow a business for ages and you've been skint and you've been like you've not been able to treat yourself, you've not been able to go on holiday, you've not been able to and because it's hard, you have to make sacrifices. Maybe you've had to give up working full time, so if whatever your personal circumstances are, it's hard. And so then obviously if you start making money, you want to enjoy that.
Yeah.
But at the same time, really what you need to be doing in that first year is when you start making money, you say, hang on a minute, this is great, I'm making money, but A, I'm going to have to pay tax on it. B, I'm going to have next year, and I've got to think, you've got to just sit on it, haven't you? You've got to manage it for a period of time, however long that is. You might 3, 5, 10 years even, until you get to a point where then you can start enjoying the money that's coming in.
There's all different taxes that I think a lot of people don't even give a second thought to.
No.
So you've got your corporation tax,
VAT,
your self-assessment tax, and I think the one that catches people out a lot is the self-assessment payment on account.
Yeah.
Everybody forgets about that until they get into the habit. When they first start out, they don't understand.
What is it for those of us who don't know? Obviously, I know.
No, but this is the point of having the conversation, isn't there? So when you submit a self-assessment tax return, which you will do because you're a director.
Yeah.
If you have over £1,000 in tax to pay, they'll make you pay a payment on account towards the next tax year every January and every July. Some people just don't know that, do they? But
and some people, because it is called, isn't it, a payment on account? So, I'm not doing that. Why should I pay them early? But you get fines, don't you? You get penalties for not paying it.
So again, if we're submitting the tax returns, so
on the deadline,
tax year runs 6th of April to 5th of April, and you have until 31st of January the next year to submit the tax returns. But we like to get them done like ASAP as soon as the tax year has passed.
Yeah.
And then we can then tell that client, you're going to have this due in January, and then in the July of the next year, you're going to have this due. So we like to give them as much notice as possible, don't we?
The reversal of that, like we were saying before, people have good years, people have bad years. If you then go into a year where you're not making a lot of money and for whatever reason, we can then do your tax return early and reduce that payment on account because it's not needed anymore. But
because
if we're doing it 12 months after or 9 months after, you've already paid it. And then you didn't really need to.
Yeah. It's all about going into things as much as possible with your eyes open rather than your head in the sand.
Yeah.
Because you've got to be anticipating these things going, and not forgetting about it. And, you need to know what's due, when's it due, what's it going to cost, am I liable to pay that this year or not?
Quite good, aren't they, if they're good with payment plans. So if you are paying tax from a year that was a really good year, but you're currently in a year that's really bad. They will help you. You know, you can set up a payment plan. You might have to pay back 50% of it, but the rest of it goes on a monthly direct debit.
Yeah,
so like they will help. Option. They are helpful, but I think they're not very helpful if you bury your head in the sand and just ignore the letters.
Yeah.
VAT is one that people don't tend to like, do they? So you can do VAT in 3 different ways. So you can do an annual VAT return once a year. You can do a quarterly one 4 times a year, or you can do a monthly one. And most people tend to do quarterly. So say if your first VAT period was January, February, March, you have a month and 7 days after that period to pay the VAT. So that's one that people tend to dislike, because you get a really small window to pay it over. Yeah. But if we're doing the monthly bookkeeping, then we can look at each month at the end of the month and say, we think your VAT bill is going to be this for January, put that in a saver. We think it's going to be this for February, put that in a saver. March, that's the thing, put that in a saver.
You're actually collecting VAT. The way to look at it is you're collecting VAT for the taxman, aren't you?
Yeah.
It's like when it comes in, the VAT on, it's not your money, so don't spend it.
Yeah.
If you get into that habit from day one, it makes it really...
You've not got to find the money then.
So at the end of the month, like, you know that you've taken in X amount of money in VAT. Yeah. That money needs to go straight out of your account into a VAT saving. There we go. That's the VAT.
I've had a client in the past where we didn't necessarily send him a report at the end of every month to say this is what it estimates at. He just got in and he did it himself. We didn't even recommend him to do it, but he'd save for every sales invoice that he sent, he'd put the VAT element in a VAT savings account. Yeah. So then there was always more than enough money in that account then, because he obviously had purchase VAT to come back.
Yeah.
VAT on
but he never had to worry. So then his sales was, what was in his bank was what he's made, and the other account was for
that's a really prudent way of looking at it.
Well, you just get used to not having it in the first place, because it's not yours, is it?
No.
So that's the way to look at it.
A lot of people don't think like that, and they just go, well, it's coming to my bank, so I'll spend it.
Yeah, exactly. Yeah. And you're spending the government's money then, and then obviously that's not
great.
Because they're going to come after it, aren't they?
Yeah. They do want it. Yeah. They want it back.
Yeah.
So can I ask you a question, actually? Yeah. So how are you finding being podcast hosts? Because you're accountants.
I'm not a host.
Well, you are now. You're a host now. How are you finding it? It's a big change, isn't it? You know, you say this. I think it's quite brave from your point of view.
It was nerve-wracking at first. Well, not nerve-wracking. I think I was a bit Matthew probably was as well. Daunting.
Are you enjoying it though?
Yeah, it's good.
I do enjoy it. I
Everyone at work's still a bit like, where are you going?
Yeah.
What are you doing? What is this podcast?
I think last week when I was doing my first one, I was probably a little bit more nervous.
Yeah. Of course,
but
I think once you get into the swing of it, I think the starting it's always a bit, who's going to do this bit or whatever, but talking about work and what we do is pretty easy.
It comes quite naturally because it's just talking about what we do. It's what we do every day, and we've done for a long time, haven't we? Yeah. So I think it comes naturally to Matthew. Matthew likes talking.
Matthew's been doing it for a very long time.
Very long time. Not saying he's old, but...
He's a bit. He's older than me anyway.
He's been on the
so he must be getting on a bit.
Yeah. He's done his talk on the stage at Zero, hasn't he? So he's quite comfortable.
Yeah.
I don't think I could do that. This is fine. I don't think I could do it with an audience.
Not yet, Katie.
Not yet.
I mean, when you're doing your the podcast live shows, you know, you've got a huge...
Hello and welcome to the Ledger Lounge.
At the GMX.
Hi, guys.
Yeah.
Oh, well, thanks for listening.
No, thank you for listening,
And thanks for joining us.
Thanks for having me. I've enjoyed it.
Good. Cool. Bye.
Bye, everyone. The Ledger Lounge is brought to you by James Scott Accounting and is hosted by Matthew Taylor, Katie Allan and Lauren Thompson. For more information, visit jamesscott.com. This podcast is recorded at and produced by KUPOD Productions, audio by Matt Dean and video by Eddie Corteen. For more info, visit kupod.co.uk.